Hi everyone, welcome back to Outspoken Market Global. Leandro Guerra is speaking. I want to help you understand what is happening when Mr. Michael Burry said that prediction markets are gambling no matter what anyone calls it. And what this gentleman also does, it's a type of gambling, but just using different tools. I get no money from any of the websites that I'm going to show you today. I'm here to speak about the definition and to make you understand what prediction markets are and how different they are from traditional betting sites, how different they are from a casino, and all of those things that indeed they have an edge in favor of the house, and the house always wins. However, in a prediction market, you are trading against other traders. And what you are doing, you are trading a probability of something to happen in the future. And this is exactly what this gentleman is doing, what traders do, what investors do. So, and I'm speaking about him because the headline is about him and he said it. And here we have an example of Kolshi, and I want to give you an example of Polymarket, for example. I have no link with these companies. Remember, I'm here to teach you about the definition. Now, let's say you are an investor and you don't believe because you have an investment thesis, or you are a trader, you have your convictions, you did your own research, and you don't believe the Federal Reserve will have yet in 2026 rate cut. So they are not going to lower the interest rates because economy is doing in a way that this is not necessary, because if they lower the interest rate, eventually inflation may get out of control and things could be bad. Let's say you believe that. You are a trader or an investor. If you go to the traditional financial markets, for example, what Mr. Burry does and many other people, of course, they do, you will find instruments that will help you to benefit from this hypothesis that you have that the Federal Reserve will not have any rate cut in this year. Meaning, you are making a projection for the future, taking an available capital to trade that projection, and you hope that in the future, what you believe that will happen in the end happens. What is the difference that you come to a website like this, on which you can directly trade the probability of that event to happen directly? You can do it. No, Leandro, but it's gambling, it's betting. It's betting, but my point is trading is also betting. So when Michael Burry says that there is an AI bubble and he buy puts of AI related companies, he is betting that his hypothesis is right and the market is going to go down. So his puts will increase in value and he will profit. And he is good at it. He is right about his thesis, about his assumptions. My point is, you can have some assumptions and then you can come to a market like that and do the same stuff with other instruments. Look, I'm not defending or promoting anything. I'm just saying that this is another financial instrument. And when you try to virtue signaling something, usually you may have an interest on that. And indeed, he has. On the 13th of July, so a couple of weeks ago, we had this news saying that he allocated capital in bets or betting company. And then he comes and says that. So he believes that government will soon heavily regulate cowshed, poly market, and any other related business, and that will favor the traditional betting stocks. And then he comes and he says something like that. He is betting in the same way that you can do in a prediction market. There is no difference. But, Professor, the point is, in a bet website, if I place, I don't know, $10 and something happened against what I thought would happen, I will lose my full $10. And that is a problem with these betting websites, with gambling. And I cannot, for example, minimize my risk. I cannot close the position, or I cannot even increase the position if I see that the movement is going in my favor. But that is the point here. You can, in websites like that, you can. So the probability of something to happen or not to happen, because you can buy the yes or buy the no, they behave just like in a stock. So you buy a certain amount of shares, you will have a price that represents the probability. And then if that goes up, so for example, in May, there was the idea that there was the chance of 38% that the Fed will not have any rate cuts in 2026. Let's say you bought here this probability, and in that was the end of April. Few days later, that probability has increased from 38% up to 57%. You don't need to wait the end of 2026 to collect your money. In the same market, assuming it has liquidity, of course, you can get out selling the shares of the yes that you have bought for that particular one. It's like trading on a stock. So, yes, maybe it is gambling. Maybe he is right. But this is no different from what he does, from what an investor does, from what a trader does. It's just the morality and the virtuous signaling that the person is going to have. Remember, not speaking about the betting, about the casinos and things like that, on which the house price the odds, the probabilities, and they place an edge on this. Here we are trading the probability, freely entering and exit in the way that we want, of course, according to the market that we are trying to trade. They can be faster, they can be with longer term periods. But think about the options market, for example. If you're dealing with zero DTE options or 1 day to expiration options, you buy an option, a call option, because you believe a stock will go up. If that does not go above the strike plus commission plus the premium that you have paid and etc. in that very short time window, in the same day for the zero DTE or 1 day to the 1 day to expiration, you lose everything that you placed in your call option. It's just like that. This is like an option. And eventually you buy the option because you are leveraging actually that position. Because if you think how much you paid for the option times the delta, eventually you get your leverage level. Do you understand? That is the point. So don't come to me and say that prediction markets, they are gambling no matter what anyone calls it. Because if this thing is gambling, being an investor or a trader is also gambling. Okay? Words matter, definitions matter. Again, I'm not advocating in favor of anything. I'm speaking about definitions and I'm speaking about people having other interests and then eventually saying something that one is the same, as I said, and plus maybe it's to defend his thesis and make a self-fulfilling prophecy. So trade safe, keep things simple, do your own research, and see you next time. Ciao, ciao.